A very good evening to all my BCA final year students. Let us commence with the subject of COS, that is Computer Oriented Accounting System. Now in this series of video, we are learning about journal entries and how to perform a journal entry under different transactions or different subheadings. In the previous video or the previous class, we learned about the journal entries that is of receipt, that is of purchase and sales account, credit and cash transactions, transactions related to individual persons, transaction related to business expenses. Today we are going to learn about different other topics which are included, and we shall learn about how that particular topics are related in the business and how do we exactly perform a journal entry with the relation of those transactions. Moving ahead to your PPT. Now, the first one is treatment of receipts on personal account. Last class we learned about payments on personal account, but today we are learning about receipts on personal account. When an amount is received against a person receivable from him. Okay. Amount is received means you are about to receive some amount on behalf of a person or against a person, means on for a person or for that particular person. Amount receivable from him. Amount receivable means that he might have been due some amount and he is able to pay now. So amount receivable from him. The personal account of the debtor should be credited. However, okay, the personal account of the debtor means the person who owes to the business. Creditor, to whom we owe. Debtor, the person who owes to the business, is called as the debtor. Not debtor, it's called as debtor. Should be credited. However, if the account is received represents business income, then the particular income, that is nominal account, should be credited. It is the same as we learned in the last class, that if payment is made, we should debit the person's name if it is on personal account. If it is on personal expenses, or sorry, if it is not personal expense, if it is on business expenses, we have to debit the particular expense account. Here it is the reverse. If we receive money, we can write cash account debited rupees 800 from Tarun, being cash received from Tarun, if it is on personal account. Moving ahead. Received 800 from Tarun as commission. So commission is a business income. The commission is a business income or business receivable. So if commission is mentioned, we can write cash account debited, as cash is a real account, and debit what comes in and credit what goes out. So debit is what coming in, cash is coming in, and business expense or business income is a nominal account. So debit all expenses and losses, credit all incomes and gains. So commission is the income, so we credit the commission account over here to commission account 800 being commission received. So this is just the opposite what we learned in the previous class or the previous chapter or the previous subheading. If there is a payment given to the creditor or we are giving business expense, you have to debit the creditor's name and business expense should be debited. If you are receiving money, it should be credited, the person's name and the business income's name. Next is treatment for trade discount. Now, what do we understand by trade discount? Trade discount is an allowance or concession by the seller to the buyer by the way of deduction in the list price or catalog price. Okay. There is a price mentioned in every item that we purchase. So in reduction of that item price, suppose a goods is sold for rupees 100 and the discount is given of rupees 10%. 10% means 10 rupees. So if we got that product at rupees 90, then we are getting a trade discount of rupees of 10%. So listed price or catalog price is the price of the material or the price of the good which is mentioned in the product itself. It is allowed by the manufacturer to the wholesaler or to the wholesaler to the retailer or from the retailers to the customers. So this is the chain what we followed in the business, the manufacturer to the wholesalers, from the wholesalers to the retailers and from the retailers to the customers. The trade discount may be allowed on bulk purchases or purchases of specific item. So trade discount is not that discount which is for everyone. It might be for a bulk purchase or for a specific quantity. Suppose 100 quintal, 10 quintal, 20 quintal. It's a huge amount of quantity. So for that bulk purchase or a specific quantity, there are trade discount there. If you order 100 pieces, you get 10 pieces free, or you get 20% off, or you get 30% off. So that is the specific order given by the either by the manufacturer or manufacturer to the wholesaler to the retailer to the customers. Entry of sale or purchase of goods with trade discount is recorded with the net amount. So net amount is the amount from which the goods is purchased or sold. Net amount is the amount from which the good is purchased or sold. Next is trade discount can be allowed on credit and cash purchases also. For if you are having a cash purchase, then also there is a trade discount allowed. If there is if you're purchasing on the credit basis, then also a trade discount is allowed. So trade discount is a discount which is a concession or reduction in the price which is allowed by the seller for in which the list price or the catalog price of the item is given on the discounted rate. Maybe 10%, 15%, 10 rupees, 5 rupees, 100 rupees, whatever it may be. It may be allowed from the manufacturer to the wholesalers, to the wholesalers, to the retailers, from the retailers to the customers. Trade discount may be allowed on a specific bulk quantity. If you take 1 or 2 items, they won't allow you a good discount. But if you take 100 quantity, 1000 quantity, they may allow you a good discount. Moving ahead, example. Goods sold to Raman at list price 1000, trade discount 10%. Now see these transactions. So trade discount 10% means you have to take out 1000%. How much is 10% of 1000? First we are taking out how much is 10% of 1000. So 10 divided by 100 into 1000, that is 100 rupees. Hence 10% trade discount is 1000 rupees minus 100 rupees is equal to 90 rupees. So the entry is simple. Raman account debited 900 to sales account. Raman is a personal account. So personal account is debit the receiver 900 rupees, credit the giver. Next is sales. Sales is a income. Means debit all expenses and losses and credit all incomes and gains according to the nominal account. Being sales made and discount allowed. Here we are giving a straight away discount of 10% to our customer. So trade discount is equal to, we have to find out 10% of rupees 1000. So we have written 10 by 100 into 1000. Simple formula. There is no big calculation. That is 100 rupees. So hence 10% of trade discount is 1000 rupees minus 100 rupees is equal to 900 rupees. So Raman account debited to sales account, being sales made and discount allowed. Moving ahead, treatment of cash discount, full settlements. Now this is different from the trade discount part. Cash discount and trade discount are not the same. Trade discount is a different part and cash discount is a separate part. In some cases, credit may be allowed. Creditors may allow some concession to his debtor to prompt to make his payment within the period of credit allowed. Such concession is called as cash discount. Okay. So when we take goods on the credit basis, to prompt means to get the full payment, full and settlement payment, the creditor, the person from whom we bought goods, allow us some specific concession. Means if there is you took 10,000 rupees of goods, then he will allow you he may allow you to pay 9,000 rupees. So there is a discount of 10%. Okay. So it is allowed to prompt the payment, means within the tenure of the payment he should pay. So he allows a particular discount on it. It is allowed by the person receiving the payment and represent expenditure. Obviously, the person who is receiving the payment, the creditor is receiving the payment and it represents expense. Obviously, you have given the goods of rupees 10,000 to someone and you're receiving rupees 9,000. It is an expense or expenditure only. It is availed by the person making the payment and represent income. Obviously, if I am the person who is giving you discount, it is my expenditure. The person you are receiving the discount, then it is your advantages. So it represents your income. It is, if it is my expenditure, it is your income. If it is your expenditure, that is my income. It's vice versa always in the business. So trade discount is, it is allowed on the specific bulk quantity. It can be both cash or credit, but cash discount is when the creditor give a prompt or concession to the debtor to make the payments within the period of time so that he can get his full and final payment on the period of time. Let us see the example. Received rupees 10,000 from Alok in the full settlement of allowed amount due from him is 1,050. So 1,000 rupees you received and your amount was 1,050. So cash account debited, because cash is a real account, debit what comes in. Discount received account debited because you are giving a discount of rupees 50 to Alok account. Means Alok is a personal account, debit what comes in, credit what goes out. So you're giving a discount of rupees 50. So you're writing the particular transaction in such a way, cash account debited, you're receiving, you had to receive the account of 1,050, but you gave a discount of rupees 50. So discount received account debited 50 rupees to Alok account. The full and final settlement amount is rupees 1,000. So that is the whole scenario, being cash received from Alok in full settlement. So this is the whole scenario, that you're doing the full settlement amount in the books of Alok. So once again, I'm explaining. Cash rupees 1,000 from Alok in the full settlement against the amount due from him rupees 1,050. So obviously you're getting a 50 rupees less for the amount you are given to Alok. So cash account debited as it is a real account. So it belongs to real account. Debit what comes in, credit what goes out. Discount received account debited 50 rupees, and to Alok account it is a personal account. Debit all expenses and loss. Debit the receiver and credit the giver. So Alok is the giver, so we credited the Alok account. Being cash received from Alok in full settlement. So this is the full and final settlement of Alok's account. Now example 2. Paid rupees 960 to Singh in full settlement in receiving to his account of rupees 1,000. Now it is the reverse of the previous entry. So Singh account debited, as Singh is a personal account, debit the receiver and credit the giver. To cash account 960, to discount received 40 rupees. Obviously, if you subtract 1,000 from 960, you get an amount of rupees 40. So 40 is the discount received by you. Discount received by you. Being cash paid to Singh in full settlement. Being cash paid to Singh in full settlement. There you were giving a discount of rupees 50. Here you are receiving a discount of rupees 40. So you see the transaction, it is just reverse of the previous transaction. Okay. There you have debited cash account and discount received account. Here you have debited Singh's account. There you have credited Alok's account. So it is the vice versa or reverse of the previous entry. If you're doing the payment, you have to write this entry. If you're receiving the payment, you have to write that entry. Now, treatment of bad debts. Now, what is bad debts? Bad debts represent an irrecoverable account from the customer. It is a loss to the business. Such a loss may arise due to death, insolvency, or dishonesty. Now, death means if the person is dead, you can't receive money from him. Insolvency means insolvency is a person that court has declared that that person is not in a state to return the money, or that person has gone bankrupt. Okay. Or dishonesty means the meaning to cheat, or the thoughts of cheating, that is called as dishonesty. Bad debts is an irreversible account. Bad debts is simply when we give a certain amount of credit to the person in amount of money or in the terms of goods, and that person is not able to pay the amount on time. Suppose I gave rupees 5,000 to my friend, and my friend has become insolvent and has not returned my money. So in my business, that 5,000 amount will be written as bad debts because it is irrecoverable. The amount I won't get it back. So it is called as bad debt amount. The amount recovered is debited to cash account, and irrecoverable account is debited to bad debt account as it is a loss. Obviously, bad debt is a loss to the business, and if at all the account or the amount is receivable, it is debited to cash account, and irrecoverable means the amount which will not be receiving in the business is debited to bad debt account as it is a loss. Let us see the example to understand it in a better sense. Example, Shankar owned us rupees 1,000 is declared insolvent as 60 paisa in a rupees can be only recovered. Here it is a given that 60 paisa in a rupee can be recovered from Shankar, not more than that. So 60 paisa in a rupees is equal to 60 rupees and 100 rupees. Obviously, 1 rupees in 1 rupee, if you can recover 60 paisa, then in 10 rupees you can recover 6 rupees. In 100 rupees you can recover 60 rupees. So similarly, in 1,000 rupees you can recover 600 rupees according to the maths. Now the entry is cash account debited 600. So the amount was rupees 1,000 and you can recover only 600. So remaining amount is rupees 400. So that remaining account it is irrecoverable or cannot be recoverable, cannot be recovered. So we are transferring that irrecoverable account or we can say the bad debt amount to the bad debt account. So cash account debited 600, bad debt account debited 400 to Shankar account. Being bad debt recovered 6 rupees, 6 rupees in a paisa, sorry, 60 paisa in a rupee from Shankar. So bad debt can be recovered also, but in sometimes when we cannot recover bad debt, so simply we will write the bad debt account debited to Shankar account because there is no recoverable money listed in our business. We cannot have that money back in our business. So that is all about the bad debts. So I'm repeating again, Shankar owned rupees 1,000 is declared insolvent and 60 paisa in a rupee can be recovered. If 60 paisa in a rupee, then 10 rupees we can recover 6 rupees. In similarly, in 100 rupees we can recover 60 rupees. In 1,000 rupees we can recover 600 rupees. So out of 1,000 you can only recover 600. So remaining 4,000. So 400 amount will go to the bad debts account. So cash account debited, bad debt account debited to Shankar account. So that's all for today's class. We will continue with your this classes in the next video. Thank you, one and all.